Health savings accounts. So if some of you may have had experience with this in real life, some of you may have not. Totally depends on you and what you've done. Now, these are for high deductible health insurance plans. A health savings account to tax advantage account where your company will take money out of your paycheck if you so choose, put it into this account. You can use it for doctor's visits, prescriptions, anything like that. We'll see commonly where you can't take it to CVS and buy buy a bunch of sunscreen or anything, but you can use it for your prescriptions, anything like that. Tax advantage account. It allows individuals to save for medical expenses not covered by their high deductible health plan. And why is this? Well, high deductible, not to get too much into health insurance because I hate talking about health insurance. I understand investments. I could talk about retirement accounts all day, but I do understand health. I just hate the medical system. I could go on and on. I'm sure many of you agree how expensive it is in this country. Anyway, going along, HSAs offer several tax benefits, including tax deductible contributions, tax-deferred growth, and tax-free withdrawals for qualified medical expenses. So how it works is generally if you have that high deductible plan, it means that you're paying more out of pocket than a low deductible plan. And as such, you get this benefit of a health savings account. So this health savings account, again, just think of it like you got a Fidelity account. It's got annual limits, and you can put that money into your account. Let's say you contribute $3,000 a year, and that money grows just like in an investment account, but it grows tax-free. And if you need to take money out to pay for your prescriptions or anything, then you can do that. I worked for a manager one time. He said he took a bunch of his health savings account money, threw it into Tesla. This was years and years and years ago. Made quite a good chunk of change, and then took it out once he had a child and paid for that child. All those wonderful medical expenses when you have a child. Not that I would know, but that is a great usage of that. Now, this does not expire. The money does not go kaputs. But we'll see. Flexible spending accounts, something also we need to do. Something we need to know. If you put money into a flexible spending account, which is a similar type of account, that money does actually expire at the end of the year. But HSAs, think of it like just a rolling account. As of this moment, I have one. It's just like a retirement account. You can adjust, you can invest the money however you want. You can take money out to pay for your medical bills, whatever you want to do like that. So that's just a good general idea of what a health savings account is if you were not too sure. Contributions. HSA contributions can be made by individuals, employers, or both. I have never had the benefit of, I feel like I'm getting very personal into what I've been seeing, but I have never had the personal benefit of an employer contributing it to my HSA, but I know friends who do. So that is just, maybe they have a match, or maybe they say, we'll give you $1,000 a year into your HSA account. You have that. Very happy for you. Never seen that before myself. Contributions are tax deductible, reducing the individual's taxable income. If that is money taken out from your employer, obviously that'll be reflected on your W-2 as well. It'll say, hey, $1,000 was taken out of your account, amount, so you're not going to include that as taxable income. Now, if you do it like I do, and I have my own account just separate because I wanted to manage it myself, then you're going to report that on your 1040 and you'll take the deduction for it. The maximum annual contribution limit changes every year, and it's double for married taxpayers, as we generally see. Any sort of limit is generally doubled for married filing jointly. Individuals age 55 or older can make an additional catch-up contribution, which is also subject to change. Contributions can be made up to the tax filing deadline for the tax year, typically April 15th of the following year. So this is also something that applies to IRAs and all that. Not to get into that too much. It's not really mentioned on the exam, but it's something that could help you in real life. Up until you file your taxes, it's April 15th, or up until you file your taxes, you can make contributions for the prior year, for your HSAs, for your IRAs. Obviously, not giving you tax advice, so follow up with your local CPA, which could be you very shortly. Unused HSA contributions carried over year to year with no limit to the account balance. Like I said, that is not the case for flexible spending accounts, which we'll talk about as well. Now, distributions, HSA funds can be used to pay for qualified medical expenses. You can pretty much, there are lists on the IRS website, but let's just say it nice and simply. So you have a child, that's fair. You have surgery, prescriptions, those are pretty clear cut. Let's say you're buying sunscreen at CVS, that's not probably going to be eligible, or hand sanitizer, right? But most medical, dental, and vision expenses, as well as some over-the-counter medications and medical supplies, distributions for qualified medical expenses will be tax-free. However, let's see that withdrawals for non-qualified expenses will be subject to income tax. So it's just like if you just paid tax on it normally, but also a 20% penalty if the individual is under age 65. After age 65, non-qualified withdrawals are still subject to income tax, but actually not the penalty. So if you just need that money because you want to pay down some credit card loans, then you will be that would be what we're dealing with here. And then lastly, unlike flexible spending accounts, HSAs do not have a use it or lose it rule, meaning funds can be carried over indefinitely. FSAs, essentially a very similar type thing. I myself had a vision and dental flexible spending account when I worked at my first job, and it's different from an HSA. Generally, it's not tied to a high deductible, low deductible plan, and mine specifically was for vision and dental, so I could use it. I had a whole funny story where I tried to use it for LASIK, but because I got the plan after I got LASIK, I couldn't use it and had to use it on a bunch of ridiculous dental stuff because it was use it or lose it. So just went to the dentist and said, what sort of extra work can you do for me? And they loved me. They had a good time taking my money. But it was use it or lose it, so you don't really have too much of a choice there. All right, let's see some examples here for the HSA. Tax deductible contributions. Let's suppose that you contribute $3,000 to an HSA and your marginal tax rate is 25%. You would save $750 in taxes up front, so $3,000 times 25%, due to the tax deductible nature of HSA contributions. Now, I know the tax calculation is much more complicated than this. We have whole tax brackets, progressive tax system, and all that. But that would be a little ridiculous, right? Every time we had to give an example like this, so we just say 25% times 3,000. Tax-free growth, let's say the $3,000 HSA contribution grows to $5,000 over time due to investment returns, just like my old manager. You invest it in something profitable, you make some good chunk of change on that. You have $3,000 in there and you make some good decisions. The growth is tax-deferred, meaning you don't pay taxes on the earnings within the HSA. And then tax-free withdrawals for qualified medical expenses. If you withdraw the entire $5,000 from the HSA for qualified medical expenses, the distribution is tax-free. So here, you're going to save on both the contribution phase and when using the funds for eligible expenses. Again, prescriptions, doctor's appointments, surgeries, anything like that. And don't you know it, we are probably, as we get older, going to have quite the amount of expenses and bills to pay. Just how the world works.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.